So yesterday I saw an opportunity with the company called Shopify, and I posted that in the group. And what I saw there was, you take a look at a lot of businesses that are looking to go from their brick and mortar, the existing businesses going from brick and mortar to more of an aggressive online presence. And you're even taking a look at folks that are out of work that were typically a W-2 employee that are now looking to go ahead and say, I want to take this opportunity of this global shutdown to be able to go ahead and start that business that I always want to start. So they're looking at starting an e-commerce business. And these are things that play into the strength of Shopify. So I looked at this, I'm going to share my chart with you. I saw this yesterday and I entered a trade. And before I share the chart with you, what I want to talk about is kind of the structure. And even if you don't really understand it, that's okay. Over time, you'll gradually get the concept. But I went ahead and I traded this particular position with call options. And I went into actually two positions. One, I went out to the October calls, and I went out to the $900 strike price. And I can't remember what I paid for it, but it's gone up quite a bit since then because Shopify is up 12, 13 points today. You'll take a look at that in a minute. But I also, at the same time of not only buying the Octobers, I sold the September call options, the $900 strike price, which actually expires today. And Shopify actually blew past 900, went to like 905 or something in that area. And then since then it's pulled back down. So I will be able to keep the entire credit that I took in from the $900 September $900 call options, and I'll go ahead and I'll keep my long leg and continue to enjoy the ride. So let me share the screen with you so you can take a look at this. Where is it at here? Right here. This is what I want to share with you. Okay, so if we take a look at this, we can see that Shopify has traded off of this low area here yesterday and has since run up. And as I saw the strength, I actually put this trade on going into the close yesterday because I was waiting to see if it was going to hold that area. And it did hold the area, started to make a bounce. I got into the trade, again, did the October $900 call options, went long on those, and I went ahead and I went short the September $900 call options, which expire today, and I took in a credit. So as long as it stays below 900, which it looks like it probably will because the market's pulled back down, I'll keep the entire credit. So the market gave me a credit for those call options that I sold. And I'll also keep my long leg for the October at a reduced price. You know, what I paid yesterday minus the credit that I took in from the Septembers. And I'll continue to enjoy the ride upwards as Shopify continues to recover. Because as I said before, I believe the catalyst is going to be the fact that Shopify is playing into the strength of this people going ahead and starting their own online presence, whether they're entrepreneurs or whether they're going ahead and converting over from a W-2 to entrepreneurship. So hopefully you enjoyed that. And like I said, over time, if you don't understand completely about call options, don't understand, I think the important thing is to know that when you're trading the marketplace, you want to have a plan, you want to have a strategy, you want to think about what if you're wrong on the trade, how are you still going to make profits from this market? This is Bruce Dinger. Take care.